Hello, guys, and welcome to my live stream. Today's stream is not going to be about gaming. I'm not going to play any games. So this is something that I've been trying to do for a while now, and this is also the reason why I set up this whole streaming platform. I was kind of testing around with the games, and I plan to do more games and all that. But this was my, I guess you can say, ultimate goal. Now, it's going to so for today's episode, because it's Friday. And to be honest, I'm still kind of waiting for some stuff to happen with the account. I'll explain that in a second. But for today's stream, we're going to open up with the stock market in about 5 minutes. And I'm basically going to review my portfolio and other changes that I've made ever since I kind of did my last Robinhood update video. And I wanted to do as a live stream because it's just something that I was always interested in, and uh, I'm thinking this Monday coming up, I might start doing some live trading when the market opens. So unfortunately, because I'm in Hawaii, the market opens at 3:30. So it took me a couple of weeks just to kind of get my sleep cycle to where I can do this. Because when I first started, I would uh, I would go to sleep and I would try to wake up before the market opened, maybe like an hour before, so I can kind of prep. But I couldn't do that. I just couldn't wake up at 2:30 in the morning, especially if I was going to sleep like at 9, 10 o'clock, sometimes even later. And so it took me a little while, but now I'm actually going to sleep after the first couple hours the market is open, because it seems from the research that I've done, it seems that that's probably most likely when I'll be able to generate some money, I guess, get in some trades and get out. I can't, well, I'll explain that in a second, but so that took me a little while. So now I've been kind of going to sleep at about 6, 7 in the morning, and then waking up at about 2, 3. How many hours is that? 6, 7. So yeah, about 7 hours, 7, 8 hours, something somewhere on that schedule. So because of that, it's been taking me a little while to get used to it. I don't want to say fortunately, but being that we're quarantined for this COVID-19, it's kind of made it a little bit easier. If I was on a regular working schedule where I would take the girls to school at 7, 8 in the morning and then get ready to go shoot weddings and stuff like that, that'd be really difficult because I would have to get up before 3:30, stay up for the market a couple hours, and then do some trading after that, which just thinking about it sounds difficult. So I would think I would prefer, if somehow I can get it to work, I would prefer to be able to wake up around 2:30, and then that way it gives me some time to get ready to look for stocks that I plan to trade, or at least do all my markings on my support lines, resistant lines, which we'll talk about that, and then stay up till about, I do a couple of trades, maybe get a couple of day trades in, and then be able to take the girls to school, shoot some weddings, come home, maybe eat dinner, and then go to sleep, something like that. So somewhere around that, because right now, even though I'm still in the military, and the whole time I thought, if something happens on the photography side with the weddings, or like last, like 2 years ago in 2018, when I broke my ankle and I couldn't shoot, or even the year before that, where I was trying to do a mobile studio and I really wasn't making any money. So I thought, okay, where that happens and we get into a little bit of financial trouble or something, then I always have the military. But the problem is that during this quarantine, even the military shut down. So only really essential personnel were getting brought in, or whenever there were some special duties and things like that. So when I thought that I was gonna have the military as a background, it didn't really work out for me. So right now I'm trying to figure this out. There you go. That's the bell for the market. So let's go to the market, and I'll keep talking. So let me switch this up. Okay. And so what I did here is on the bottom, you can see where my positions are. All of these positions are with Robinhood, and so that's what I'll be talking about today. And then hopefully, probably not today. I'm probably not gonna make any trades today, but probably on Monday, we'll start doing some small trades, kind of learn, and but I'll talk about that later. So yeah, so back to the military. Hold on one second. Let me see. So Uber mark is above. Okay. So Uber is moving up. Okay, we'll talk that in a little bit. And so yeah, now that the military kind of didn't really work out the way I thought it was going to work out, then my plan is to try to do some trading, just because I was always interested in it since I started learning how to invest. That was something that I always wanted to try, and it is a little bit intimidating. But I think if I would have started doing it from the beginning, I would have been kind of put off, because it's so scary when you start putting money into the market, because you don't know how it works and you don't know if you're going to lose all of it. But now that I've been doing it for almost 4 years, long term, well, I haven't done any day trades or penny stocks uh, seriously, like multiple trades. I kind of started back in 2016, but it's just like I said, the schedule being waking up before 3:30 just wasn't working out, especially with the weddings and stuff. And so hold on one second, I'm losing my train of thought. Yeah, so uh, I wanted to, so I've been doing trading long term, like, thinking I'll buy a stock, hold it for a year, and then, and then try to analyze it after that year and keep it, or let it go or sell it. But so now, because I've been doing that for a while, that I'm comfortable now working in the stock market. You know what I mean? As far as long, holding positions long. But it's still intimidating to do day trades, especially right now, because I'm using a Thinkor Swim, which is through TD Ameritrade. I can't pronounce that. But because I'm using them, I don't have a big enough accounts to do day trading. So so I'm gonna I still have a cash account. I don't want to open up a margin account, because, like I said, it's still so risky. I'm still learning. So I'm just going to do very small day trades when I start doing it. And because it's a cash account, that means that when I buy and sell, I won't be able to short. Short meaning that I buy high and then expecting the stock to drop, which makes it a lot more difficult. But I'm still learning, so it's better. I'd rather do that and take my time doing it, and then hopefully once I figure things out, then I can start putting more money into it. Kind of managing the risk a little bit better, and all that. So I'm gonna be learning with you guys. So if you think this is interesting, first of all, I hope that it's clear to you that I'm still learning. I'm by far not a professional. This is just me trying to learn this new trade skill. I don't know what you want to call it, but so I'm just trying to learn something new, so that I have a backup in case I ever break my hand, break my foot, the tourism crashes here in Hawaii, and I can't shoot weddings like right now. And so it's just another thing to have as a backup. Um, so, and so actually, before I get started, I'm actually glad that I started investing. As scary as it was when I started back in 2016, if it wasn't for that, I wouldn't have been motivated to invest, to put money in the market. And if I didn't do that, I would have I would have basically had no backup right now, because it was in 2016, a little bit before then, like 2010, when I came back from deployment. I had some money in the bank and I decided to invest it. But I went to the bank and I just had some guy, some financial advisor, kind of invested for me. I have a YouTube video on that, if you want to check it out. But I just had that guy invested for us, and we made money on it. But there were some mistakes made where we ended up losing money on one of the retirement accounts, and it wasn't until 2016, when I started trying to learn on my own, that I caught it. and if that was 60 years of that money just sitting there not making any gains at all. And so because I decided to learn on my own in 2016, and then I've kind of focused on fundamental investing, which means I was looking at companies and how companies were valued, whether they were undervalued or overvalued. I never really got good at it. I kind of always fell back to technical analysis, where I was just looking at graphs and the movement of the price. But I wanted to get good at both, and so because of this quarantine, this coronavirus, I kind of got thrown back into it, and it seems really interesting now. So the last we've been quarantined for what since early March, so we're going on 2 months, and I've been pretty much just watching YouTube videos, reading kind of ebooks on investing, both fundamental and technical, long term and short term. So I just haven't really played with day trading because it sounds so risky, and everybody makes it seem like you're gonna lose all your money. So obviously I don't want to do that. So I want to start out slow. I started with paper money, but just the way I was, I don't know, it felt like I was taking unnecessary risks because it was paper money, it wasn't real money. And so when I started doing, I've only done really 4 trades on and off in the last few weeks, and because I was using real money, even though it was only $10, then it felt a little bit more real. You know, it felt like, okay, this isn't fake money. This is real money. Even if it's $10, $10 is $10, right? So it just kind of forced me to take a little bit more seriously, and be a little bit more cautious. Kind of look at my entry, my exit, risk management. I'm still learning, so all that stuff sometimes seems way over my head, but slowly I'm getting there. Okay, so first I'm gonna go over uh, my portfolio with Robinhood. So what I'll show you what. Oops, actually, you know what? Yeah, I confused myself because I'm looking at the Thinkor Swim, but then you guys are actually, you can see the tickers at the bottom, right? Center up, so you can see the tickers at the bottom, and that was another bell, another what do you call alarm, and I'll explain those in a second. Okay, so you can see the tickers good. Okay, so let's see. It looks like the market is going to be up today. I have a couple of stocks that are down, but so let me explain what we're looking at here. Okay, so I'm not going to cover the Thinkorswim. There's a lot of YouTube videos on that, and eventually maybe I'll cover it, but I'm still learning it, so I think I just confuse people if I try to explain how all of this stuff works. And so for now, I'm just gonna assume you know the basics, or at least you're interested in learning. And so if you have any kind of questions, hold on. Let's see. If you have any questions, then you can just ask me. I am able to see the chat, but it's a little bit complicated because I only have one monitor. It's funny too because I just sold one. I only have one monitor, so I'm actually using my phone to see the chat. Okay, I can't really see what's going on in the stream. It looks like I got a couple people watching. So if you have any questions at any point, just let me know. But for now, actually, you know what? Hold on. Let me set up my phone so it doesn't turn off. Okay, so now I have my phone. It shouldn't go off. It's plugged into my computer. So okay. So if you have any questions, just make sure you type it in. I can see it up there, and then hopefully I don't forget to check. Okay, so let's get started. So my Robinhood portfolio. Okay, so I got a bunch of stocks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Oops, I just lost count. 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 22, 23, 24, 16, 17, 18, 19, 20, 31, 32, 34. So I got 34 different stocks. And normally what I do with Robinhood is whenever I find a company, either by doing the fundamentals and actually, looking for companies that I'm familiar with, that I know are good companies, that I think are going to continue to grow using the fundamentals, and I buy it. I normally buy $1,000 worth. So however many shares that is, I normally buy about $1,000. And another technique that I use to look for stocks is just on price movement. Normally, stocks that have been gradually climbing for about a year, 6 months to a year, I try to jump in, and a lot of the times I end up getting up on the entering on the high side. So there's always like a dip after I get it, and sometimes they recover fast, and sometimes it takes a while. And so that's why in the beginning I would just kind of freak out and sell them right away, and then I decided just to buy it. It's an upward momentum, so I would just buy it, leave it alone for a year, and then sell it or keep it at the end of that year. But I'll explain to you guys what's wrong with that theory. If you're not familiar with, if it doesn't jump out at you, I'll explain it in a little bit why that's not the best technique. And so what I'll try to do is I'm basically focused on YouTube, but I'm streaming to Facebook, Twitch, and another platform from Twitter that I still can't remember the name. But what I'll do is go to my YouTube channel, and then on the description, I will add points of interest and the times, so that you don't have to sit through however long the stream is going to be. You can just go through those points, and then if you're interested in my techniques, the different stocks, the different applications that I use to track them, so you can check that. Okay, I hope that made sense. All right, so what I want to do first is go through all the stocks that I have, and then after that, I'll go through the other applications that I use to track them, like Robinhood and then investing.com, and explain why I decided to sell certain points. I'll cover a little bit here, but I'll do most of it on the other applications. Okay, so I'm not really checking the market right now because I don't intend to invest today. I just wanted to use this stream to explain these. All right, so let's start with this first one right here, which is Applied Materials. I actually just recently bought this one after the market crashed in February. Actually, you know what? Before, so there's a bunch of, I think it's about 14 stocks that I bought after the market crashed because of the coronavirus. And what I did is I had a Robinhood account where I had a margin account. So that means I can borrow money from Robinhood to invest. That's a margin account. And I think it was December when I stopped using the margin account, December 2019. And so I just basically had all my money was invested in the stocks, and I wasn't using any of Robinhood's money. But then the economy crashed, the stock market crashed. So then I decided to reactivate my margin account, and I decided to buy 14 stocks, $1,000 worth. So 14,000, 14 or 15, yeah, 15,000, because it was an even number at the bottom. So right when it started climbing back up, I think it crashed February 20th, and then March 18th is when it hit the rock at the bottom. And so at March 24th is when I started buying those stocks. And so obviously, because most of the stocks were down, I made money so far. It was actually super fast. So March 24th is when I decided to reactivate my margin account. I got 15 different companies, and just yesterday I covered my margin account. So now all the money invested in Robinhood is my own money now. So I'm not using margin account anymore. And that's because I made money on some of the other stocks. If I confused you, just ask me, send me a question. But that's what just recently happened. So Applied Materials is one of them. It was in my watch list forever, and so that's why I decided to buy it. And so I got in right around here. So let me zoom in here. So this is the daily charts for the last year. All right. So if you look at the bottom, that's March 24th. That's around the time that I decided to buy. This green line was my entry. And then my exit, because this is the highest point, my exit was supposed to be down here, which actually, the idea for this line is that if the price hit this line, I would sell it. But because it's been keeping this nice kind of even channel, see these two yellow lines? So the price has been staying right there. So I didn't want to panic. I wanted to see if it bounced off this bottom yellow line, which it did, and then it started climbing back up. So if it comes back down and it crosses this yellow line, then I'll probably sell so that it doesn't go below, so I don't end up going red, right, below this entry line. But I'm hoping that this resistant line is it's not going to be a problem, and it'll go past it. And then if it does, then I'll move this exit line up, and just kind of keep tracking it every day. For these long stocks, I don't really look at the daily charts. I'm sorry, I don't look at the intraday charts, which means minute by minute, or every 5 minutes or 15 minutes, whatever. I look at the daily charts. So depending on what the daily action is, because I know most of these are good companies, then I'll make a decision after the end of the day. So like, for example, say this one, it comes up and it bounces off this line, so the price doesn't go above this line and it starts going down, and then it crosses this bottom yellow line, then most likely it's gonna keep dropping. So because it's so close to the entry, I don't really want to do long, since I'm trying to learn. Because I'm trying to learn, I'm going to change the routine that I've been using of waiting a year. And so if it crosses this yellow line, most likely I'll sell, and then just find another company, or go, or if it starts climbing back up, maybe enter again. I'm not sure, but that's just giving me an option here. If it crosses here, it's a decision point. Either I keep it and I write it down, or hopefully it goes back up, or I sell it and then just find another company to invest in. Okay, so that's so all the stuff that I just talked about are going to basically be the same for all these other stocks. Okay, so as you can see, this one is just kind of bouncing up and down on this channel right here. If I zoom all the way out, you can see that the high point was at 69.44. So I'm hoping that it follows this previous channel right here. See this up motion right before the crash in February. So I'm hoping that it'll keep moving up and it'll go back into this type of movement. So if it keeps that movement like it's been keeping it so far, then I'll stick with it. If it starts doing some kind of dramatic drop or anything like that, then I'll probably get rid of it. And but for now, it's looking good. Okay, so that is Applied Materials, and I just entered it in March 24th. Next one's AMD, and actually AMD right now it's at what, 52 something. So I actually bought it. You can't even, if I zoom all the way out, I bought it a long time ago, so you can't even see the green line. I would have to go, I think, into the maybe 3 years. Yeah, so you can see that I bought it way down here, somewhere in what is that? May of 2018. So I bought it way down here. So because this stock has been doing so, so this is a good example of where my previous technique would have, so my let's see how to explain this. I don't want to confuse you guys. So the way I've been doing is I buy it and then I hold it for a year, and then at the end of that year I make the decision, right? So that's sometimes good and sometimes bad. The reason it's good is because I would have bought it here, and then it just immediately dropped, right? It went up, and then it started dropping, and it didn't matter because of the decision that I made to just hold it for a year. It didn't matter, so I just left it alone, and because I left it alone, then it came all the way up to the top, so right here. That makes sense? Okay. So because I didn't sell it, then I didn't panic when it dropped like this. And I just held on to it until it recovered, right? So my new technique is going to be where if I bought it here, I'm using technique. Is that the right word? My new plan, yeah, plan. Yeah. So my new plan is to, let's say I buy it here, and it's going to keep climbing, it's going to keep climbing. And then if it drops more than 10%, which would be, let's say right here, then I would sell it, right? So it would climb up, it would start dropping. Before I dropped too much, I would sell it, got my profits, and then once it stopped diving, then I would have bought it again somewhere either here or here. Once it started recovering, so you can see that this is two support lines right here, two support touches. So this is support line here. It touched once, it's touched twice, it recovered, and I would have probably bought it again here. And so that means that I would have not have to hold it while it was negative here. Okay. So hopefully I'm not confusing you, but that's what the new plan is going to allow me to do. Okay. Um, and so there's good and bad, right? So the good thing about holding it for a year is that this wouldn't have affected me, and I would have held it for a minimum a year. So when I sold it, because it would have been longer than a year, I would have only paid 15% on the gains, because I bought it and held it for more than a year. Those are the rules, tax rules. Okay, so capital gains, if it's long, which means more than 1 year, then you only pay 15%. But if I buy it and I make money from it, but it's less than a year, then whatever money I made, that's 35%. So it's more than double. Okay. So that's why in the beginning, I thought that if I held it for a year and it made money, then I can hold it if I want, if I think it's going to keep going, or I can just sell it. But then if I made money on it, I would only lose 50% on the taxes instead of 35. The problem with that, and I'll explain it later in more detail, is that if it loses money, then I could have lost maybe 10%, but I had some stocks that I left it alone because I was supposed to hold it for a year, and I lost 90%. So instead of $100, I lost $900, and so that's where the problem lies. Okay, and so I knew that was one of the kind of the rules that famous investors like Warren Buffett and others. You want to hold it long, but you also have to know when to kind of let it go. And I just wasn't tracking it enough to do that. But anyways, so this one I did. It was good, and because I changed my plan now, because now I'm treating everything differently, then I decided to sell a lot of my AMD stock, so I can get those gains. I already held it for more than a year, so I only need to pay 15% on those gains. And now that money that I made from, because it went up almost 300%, so about $1,000. It went up to about 300%. That means $4,000, right? 100% is 2,000, 3,000. Yeah. So that means that when it hit around this area right here, it was about 250%. So recently, within the last week, I sold. So if the equity, if the equity was $4,000, I sold $3,000 worth. So then I still have $1,000 worth in AMD, but now I recovered 3,000 from it, and those 3,000 went into closing my margin account. Does that make sense? So I was doing good. Instead of waiting for AMD to crash again, so as you can see, it was starting to kind of move down. So instead of waiting for that rhythm to kind of change and potentially have AMD go back down to like 200 or 150% gains, and then lose that difference, I decided to just sell it and then use that money to bring down my margin account so that in case the market drops again, then I'm not stuck in a margin account borrowing Robinhood's money, and then two things happen if so like let's say I'm using a margin account, right? And so I'm borrowing Robinhood's money. They won't let you borrow more than 50%. So if I have 25,000 in there, they won't let me borrow more than 25,000, right? But I had 34,000, 39,000 before the market crashed. But by the time it ended, I was down to like 23,000. So I can borrow another 23,000. I only borrowed 15. So let's say I'm still at $15,000 that I'm borrowing from Robinhood, right? And the market crashes again. So now the value is going down. So that means I'm not allowed to borrow as much because the value of my portfolio is going down. So I either sell stock, I would have to be forced to sell stock, or I have to add money to my account cash, which obviously I don't because I'm not working right now. So I don't really have too much spare cash to just kind of available, right? And so I didn't want to get stuck again in a margin account if the market crashed. So I decided to just uh, try to close it as best I could by selling all the stocks that I was up on. That makes sense. So I already had it for a year. I don't have to pay 35% on them anymore. I only have to pay 50% on the gains. It recovered pretty good recently, but because it started kind of showing that it was going to drop again. Before that happened, I sold it and I closed my margin account. I feel like I'm repeating myself, but I also want to make sure it's clear what I'm doing, so that I don't confuse you anymore. Okay, does that make any sense? Okay, good. Okay, so this one went up. You see the high was at 59. It dropped down after the crash, so it was down to about 36 or 37, and now it recovered, almost all the way recovered. So I could have sold right here, but I was hoping it would keep it going up, and it started moving down. So instead of risking it, I just sold right around this area right here. Okay, and now it's staying within that channel. Hopefully, it stays within that channel. See how it bounced right here? This yellow line right here is the support. This line up here is the resistance. So it's moving up. So most likely, it's going to keep moving up until it hits that yellow line again. Um, I mean, that's what I'm hoping it'll do because it's a good company. It's good stock. Okay, so that's AMD, Advanced Micro Devices. Like I said, I had that for a long time. This American National Bank shares. This was a company I never bought this company, but the company that I bought merged with this company. So when you look at my Robinhood videos that I put up, I was kind of confused when I looked at this company because I didn't know what was going on. I didn't know that it merged because I wasn't really tracking it. Like I said, I buy it, hold it for a year, and then at the end of that year, I made a decision. So at the end of the year, I was like, "What is this company?" It's saying that I bought it at zero, which doesn't make sense, right? And so what happened is I found out that the company that I had bought merged with this company, and so it didn't have a reference of the entry price, and so it just zeroed it out. But because the equity was at around 400 or 500, then I realized that I was down overall. So right now I'm still holding it. As you can see, this is a support line right here. This is the resistance, and same thing. Like in February, it crashed down to about here, and it looked like it was gonna start going down. So I thought, oh, maybe I should just sell it so I don't lose any more. But then it started recovering. So right now it looks like it's gonna move up. See, right now it's here. See this white line? So this is yesterday. This is the day before. And so on Thursday, on Wednesday, it looked like it started recovering or flattening out, and it started playing with this support line. And now today it's up a little bit. So hopefully it'll keep going. And then once it looks like it's going to start going down, hopefully it'll reach the green line. This is where I hope it'll get to. And if it's an uptrend on this green line, then I'll just hold on to it until it changes. But if it hits this line, or if it doesn't hit it and it starts going on downtrend, then I'll just cut my losses and sell it. Okay. That's just a regular alarm. And so that's what I'll do. These triangles on the right side here, these are my alarms. So I am hoping that the price stays within these, well, at least above this yellow line, and then hopefully it reaches this yellow line and crosses it. And so that's why I have, see how my previous high was up here. My most recent previous high was up here at 31.26. So I have an alarm here so that if it crosses that price line, this application and my phone are gonna let me know, and then I know that it's very likely it's gonna have a breakout. So most likely it's gonna the price momentum is gonna increase and it's gonna hopefully go up. If it doesn't reach that price, or even if it reaches it, but it kind of just hangs on there for a little while, it might bounce back down. And as long as it stays above this line here, then I'll keep it. Once it crosses this line, then I'll probably end up selling it. Okay. So that's a little technical analysis. Like I said, I don't know this company. I still haven't been able to do too much research. Actually, I have. I'll show you that later. But I did some research on these companies recently because I've been trying to kind of teach myself, but not too much. So I didn't initially know anything about this company. Okay, and so that's American National Bank shares. This next one is BlackRock Enhance. This is dividend stock. So I just got it because it was moving up when I bought it. And as you can see, I've had it for a little while. See this line right here? I bought it somewhere over here, I think, or even over here. I'm not too sure, which is 2019 maybe. So I've had it for a little while. and it crashed, and now it's moving really slowly. It's not a lot of movement up or down. So see how it dropped down here, and it started recover. It kind of recovered quickly, halfway, and then it just kind of slowly moving up and down. See that? So if I bring this line and I make it longer, you can kind of see that it had this upward momentum. It got stopped right here, and then it just been kind of moving very slowly. Okay, so right here, so see how it's kind of consolidating. So as far as I know, from what I've researched, once it starts consolidating, then two things are going to happen. It's either going to explode up or it's going to explode down, right? And so because of that, see, I have this channel again with the two yellow lines. This is my current channel, right? These red lines are just basically telling me if it's on an up or a down trend. This one right now is on an up. I can actually go like this too. So if I go down here, you can kind of see there's an uptrend, but it is consolidating. So the magic is going to be the real decision point is going to be when it crosses one of these lines. So hopefully it crosses the top line, but if it crosses the bottom yellow line, most likely it's going to start dropping, and then I'll just sell. Like I said, I'm not gonna. I'll explain why later on, but I'm not really gonna risk anymore losing 90% or even getting more into the red. And so for this one right here, I'm hoping that it breaks up. So it touches this yellow line, it shoots up, and then if it gets anywhere near the green, and it changes momentum, then I'll just sell it. Okay, so it seems like I'm gonna repeat myself a lot, but just keep that in mind. So I want everything to be above this yellow. I'm sorry, above this green, because this is where I came in. This is where my break-even point is. So I want everything to be above. As long as it holds an uptrend, I'll hold it. But if it goes, if it starts going negative, if it starts going down more than 10%, I'll just cut losses. Okay. All right. So that is BlackRock. Okay, dividend stock. So it's just basically It's a dividend stock, so it means I think every month it's giving me a certain amount, depending on how many shares I'm holding. It's giving me cash, like a paycheck. Okay? But obviously, if it's red and it keeps going down, there's no point in holding it. So, okay, so Chegg is another one that exploded. I also, in fact, even recently it went up to 300 something percent for me. I'll show you guys the 5 years so you can see. This is 5 years, and each one of these little red and green candlesticks, they call it, is a week. And so you can see I bought it somewhere over here. So if you just look at the price right here, the green line is where it came in. I bought it over here in 2017, and it just kept going up, and it has started doing big movements. It crashed, so it hit the top over here, and then recently it just exploded above that. So when that happened, when it just exploded, I figured, you know what, it's probably gonna come back down, and so I decided to sell. I think it was at 300 and something percent. So I sold everything up to $1,000. So that means, remember when I first bought it, about $1,000 worth, it exploded. I think I was at 4,500, something like that. So I sold 3,500. So I'm back down to where my initial investment is. So that means I recovered my initial investment more than that, three times more. So that's recovered. So now any price change from now on is just extra. Does that make sense? So I'm still holding I'm still holding $1,000 worth of this stock. If it explodes again and it keeps going up, that's just more free money. I already got my money back, more than that, and so I hope that makes sense. Okay, so let's go back to the daily chart, and so you can see that February 20th, right around here, it didn't have the regular pattern that all the other stocks had, where it was going up, and then on February 20th it just dropped all the way down. But it did start dropping, and it hit bottom at March 18th, like all the other stocks, and then it just started moving up and up and up and up and up. And a couple of days ago, it just had like this massive gap. I forget what the news was. Oh, they got upgraded. So they got upgraded. Some creditor or something upgraded it, and I know that this is so Chegg is like a college company. So it has. I think they offer education services for college students. And for whatever reason, you would expect it to go down since people who are out of college. I think they provide online services. That's probably why it exploded so much. So anyways, so let me show you guys the recent action right here. To close. Okay, so this is where I had it. This is my last stream. So I had the bottom right here, I had the top over here, and it just blew past it, like way past it. So now I'm just waiting for it to settle down. I mean, if I wanted to, I can probably bring this one, since it kind of recovered a little bit. So let's say this is the top, and it went past that already. So that's gonna be my new top. This is gonna be my new bottom right here. Oops. It's gonna be my new bottom right here, and it's probably gonna, hopefully, it'll bounce around between here, but most likely because of this massive gap, it's probably gonna drop down. Maybe, I don't know. I don't even know. So this is one of those that you can't. It's in the middle of like a price. It's in the middle of like an action that you can't really predict. So I move my alarm up so that if it goes below this last red point, which is 58.12, I'll get a notification. But as far as I know, there's no alarm that I can put above that, because it's at its highest point right now. So hopefully it'll just keep going up. Okay, so that's Chegg Inc. And I do have some fundamentals on these companies that I'll cover later on. But that is what I have. So let me check on the stream real quick. I have 3 people on Facebook. How's it going, guys? 2 on YouTube and 1 on Twitch. Feel free to ask any questions. Okay. But if nothing comes up, let's move on to the next one. This is another one that it was a successful stock that I bought, and so because I've been holding it for more than a year, let me go to the 3-year mark, and then I'll show you guys where I came in. So this is another one that I probably came in somewhere in 2017, July 2017, somewhere over here. So as you can see, I bought it here and it kept going up for a few weeks and then started dropping it. But I held on to it. So that's why I'm kind of still on the fence about this new strategy. But I'm just going to try something new. So I hit the top. And if it was the new strategy that I'm using, I would have probably sold right here, waited until it hit rock bottom here or the bottom, kind of keep observing it, and then would have noticed this price changed, bought it again, held it until it went up, lost 10%, would have sold it right here, waited until it recovered. See how every time it recovers. So right here for a few weeks, it was just up, and then it shot up. And over here too, it went down hard, and then it shot up again. And let me put some music. I think you guys are probably gonna be bored of just hearing my voice. So let me put some music in the background real quick. Let's see. I know YouTube is gonna flag me if I put copyrighted music, so I'm gonna go into my YouTube audio library and then pick one of my favorite artists here. Hold on, you can't see this, but let's see who is one of my guys here. Let's put vibe tracks. And I'm gonna go ahead and make a VLC playlist. That's pretty good. I'm gonna turn it down on my headphones. Let's see. I'm gonna bring it down to. I can't really hear what you guys are hearing, so let me know if you want me to turn up the music or keep it right there. Okay. Might be a little bit too distracting for me. So, all right. Let me know if the music is distracting. Okay. But I think it's better than just hearing my monotone voice, because I don't know how to fix me. Like if I get too excited, then you can already hear my voice is kind of stressing. I'll probably end up losing my voice by the end of the stream, and so but I can hear my monotone voice. I can hear that it's kind of flat, and so we'll see. That's another reason why I wanted to do live stream, because I really need to get better at just kind of changing my voice. I can't believe I was an instructor for 16 years and I never got better at it. Okay, so I should get some water next to me. You know what? Hold on one second, guys. Let me go get some water so I don't end up losing my voice. A little better. Okay, so where was I at? Okay, so this is where I came in, held it, and it's like it was up at like 300%. And so recently, because of this new strategy that I'm using, So recently, again, this one actually, you can tell. Okay, so this is a perfect example of why I decided to change my strategy. So this stock, this Creoport Incorporated, it was up to like 400% because it was at 25. If I bought, hold on, I gotta explain this one right. So I gotta take my time with this one. So I bought this one at almost $7, right? 6 something. And it hit $25. So 7, so that's 3, like 3.5, right? So 300 something percent. Something like that. Something almost 400%. And I was holding it because I held it for a year and it looked good, so I just kept holding it. But I wasn't paying close attention every day like I plan to do now. And because of that, it went from $25 before. This is way before the coronavirus. So this is August of last year. It went from $25 all the way down to $12. So I lost 50% of the. I mean, I could have like, even if, man, so that's another reason why I changed my strategy. So if it was at $25, and if I lost 10%, even 20% of value, right? And see how it just jumped right here? So that's what just happened to Chug, right? So it jumped and it went up a little bit more and then it started dropping. I could have easily just caught it somewhere over here, but I didn't because I wasn't paying attention. So where I could have, it could have reached $25 and I would have cut my losses somewhere at about 23. See this right here? See this big drop? So if it touched the support line here, I know it's kind of hard to tell, but see, it's harder to tell when they're flat like that. So it shot up, right? So this was the resistance line. It dropped down to the support line here, and then as soon as it crossed that, it just exploded. So this is the breakout right here, right? And then it bounced around and hit a high of $25. Bounced around some more, and so this is the resistance right here again, right? This is the new support, right? And so as soon as it hit that support line again, it just flat and it started dropping and dropping. I could have easily caught it here and sold it at $23, but I didn't. And so what happened is, I'm still at the, okay. And so because I didn't catch it, then it dropped all the way down to like $12. Right, and then coronavirus hit right here in February, so it started recovering, and it recovered. It went up to as high as $19, and it dropped again, and again it hit down to $12. So I already had it for longer than a year, so I could have easily sold it at 24. Whenever it started breaking down, I could have sold it, held on to it until it started kind of recovering it, and bought it again, so that I would end up buying at the lows, selling at the highs, buying at the lows again, selling at the highs. And these are the basics of trading, but I wasn't really putting a lot of effort into it, because for me to be able to do that, I have to wake up at 3:30 in the morning to track the market, because I'm not going to wake up if the cell phone tells me that a price is a certain level. You know what I mean? And then by the time I wake up, let's say 7, 8 o'clock, right? I just wasn't paying attention. But now I plan to pay more attention. So anyways, so I lost a huge opportunity right there. But it started recovering it, and let's see, it was up. It was going up on an uptrend. But see how wild it is? See how there's big ups, small, big, small. It was just so, it wasn't really clean, and it started dropping right here. So I got kind of nervous. See, it started dropping and it touched the line again. It's still staying in this uptrend, in this funnel here, but because I decided to use this new strategy, I just sold a lot right here. So I'm back at $1,000 worth, and again, because of that, I was able to pay off the what's the word again? The margin account. Okay, and thankfully it recovered. It didn't go past this yellow line right here, and it recovered. And so right now, so see, yesterday was high, and then I guess in the morning it opened up down here, and now it's moving up. So right now it's all green. So as long as it stays in this funnel right here above this yellow line. In fact, you know what, I can probably change this line again to here, because see how this was a resistant, and then it went over past it, it came back down. I don't know, maybe I'll keep it right here, because this looks like it's it'll drop down to here before it does anything else. So I'll leave it there. And so I have my alarm here. If it drops below the wick of this red candle, which is basically the bottom of this funnel here at this point, it's still moving up. So even if I put an alarm, which I guess I can, I'll put an alarm to see if it goes past this point, just for now. So if it goes above that point, it'll let me know that it's an uptrend, and I can kind of hold on to it a little longer. Right, so that is Cryoport. So that's a good stock. That one, Chug and AMD so far made me the most money. I think Anva was another one. Was it that one? No, not that one. It's another one. I'll show you later. So this one's Innova International. I'm not really familiar with this company. I was just I bought it because of the price action. And so you can see right here, it's keeping a pretty clean uptrend. It's pretty nice ups and downs here. This one went a little bit lower than expected, but not too much. So see, because I'm making these marks, you don't really know what how low it's gonna go. You know what I mean? Like, it's all for what do you call that? Foresight. You don't really know until it happens. So I mean, like, I didn't know that it was gonna stop right here. It could have kept going, and then if it did, then I could have just sold. Right? So for this one, so this is my entry point right here, right? And I've had this one for a while too. And so I was thinking about selling it when it went past this this green line and was, you know, reaching the top here. I just kind of cut my losses, but I decided, you know what, it's in an uptrend. So, and it's still pretty wide. So once it starts consolidating, then I don't know. It seems like it could go down, but I won't make a decision yet. I'll wait until this thing kind of settles a little bit better. You know, this trend. Yeah. So as long as that trend keeps going up, I'll hold on to it. As soon as it crosses these lines right here, then I'll make a decision, because it could easily cross these lines up here. Okay. So that's Innova. And then we got ETG, Eaton Advanced Tax Advantage. I'm not familiar with this one either, but this one, again, I'm on the red. So this is where I have to get, the price has to get to this point for me to break even. So until it does that, I just have to keep watching it. You see how I did a weird thing here where, it's not weird. I mean, you can't say anything weird, but so it was moving up. It was recovering from the coronavirus market crash there, and it was making a nice little uptrend, and then right here started consolidating. So this one is making me nervous because it's starting to consolidate pretty quickly, and right now it's kind of on the bottom. It's moving up. Hopefully crosses on an uptrend and not down. But if it goes down here, because it already broke this pattern, this uptrend, then if it crosses this yellow line, I'm probably gonna end up selling it and taking that loss. So I'm not gonna be as risky as I've been. So that's ETG, losing money on that one. And then another one that's down. In fact, you know, in December I sold a bunch of stock, and all of these I was green on. And so because it was past a year, and so I only kept the ones that I was green on, and I think 2 that I was getting dividends from. It was just a little bit below, maybe like 7-8%, and now I have some that are at 50% oil companies. But I'll show you that in a little bit. Okay, so this is another one. Again, it crashed. It kind of rebound kind of quick and then dropped it down, but you see that uptrend. This one still has a pretty decent pattern. You can tell it's consolidating, but now it's at the bottom. I mean, I could easily go like this, but yeah, it's actually I can bring this one up too. So you can see it's still on an uptrend. It's got to cross one of these little lines, so I'm hoping it's the top one. Not too much going on there. Fate is another one. This one was moving pretty crazy for a little while. It was making me nervous, especially right here, where it started kind of just crashing. But it stopped right there. Right, in fact, it stopped above this previous resistant line. And it just shot up, came down, it held here, and it hasn't really. It's still holding an uptrend, and it hasn't crossed. It hasn't crossed this pattern. So this is the one thing that I'm still not really clear about, and I get kind of confused sometimes when I make these lines, because right now the price is above this 200 moving average line. And so far what I understand is it averages the last 200 days the price. So whatever the price was in the last 200 days, it averages it, and then it shows a line with that average. And so if it's above that average, then that means eventually the price is going to go down to the average. Most likely going to cross and then come back up. So it's going to basically snake its way through that 200 average unless something crazy happens, news or good things, bad things, whatever. Unless something happens, it's not really going to stay above or below that line for too long, right? And so because right now the price it kind of hit it and bounced, and now I thought it was going to come down here and cross it, but it didn't. It just kind of kept it. But it's still above the line, so I'm thinking it's going to go down. See how it's getting kind of flat? See this price movement is kind of, if you look at the overall, since the crash, it's an uptrend, right? It's higher lows, right? And higher low. But if you look at just the last few weeks, it looks like it's in a downtrend. So this is the part that confuses me. Do I look at this major uptrend line, or should I make another one that follows basically the recent action? See? If I follow that, if I make a line like that, then it's showing a downtrend. Right? I mean, everybody talks about it. All the videos that I watch, all the books that I read, they all talk about this part right here. It's temporary. It's like the most recent pattern. And but like, what do you do with that? Should I look at the bigger pattern, the longer pattern, 6 months, let's say, or these are a couple months, or do I look at the immediate pattern? I guess sometimes you can overanalyze things, so that's why I just keep them off. And as long as those bottoms are higher than the last one, so this is the bottom, this is the bottom, this is the bottom, and they're all higher than the previous one. So as long as, to avoid confusing myself, I'll just look at those. Okay. And right now I'm still above the green, so even after the crash, it stayed above my break-even point. So I'm pretty happy with this one so far. Okay, the next one is First Bancorp, Puerto Rico. I don't even know when I grabbed this one, to be honest. Again, so this is the last couple of days. I need to keep adjusting this so I get a better idea of where the price is moving to. Okay, so again, uptrend. Most of these are going on uptrend. There's only a couple that are starting to change. Like AMD, to me, it looks like it's starting to change. So that's one of the reasons I decided to sell. But this one, still higher highs. Starting to flatten out. See how this one is the bottom right here, and then it touched. So that's like a double. I forget what they call this, but it touched the support line here. It went up. That's a resistance, and then it went back down. So it didn't go higher. It went to the same as the previous one, but it's going back up. So it's either gonna shoot through this one, or it's gonna touch it again and do the double tap up here and then come crashing down. Right now for this one, which I don't remember if I'm above or below it. Yeah, I'm below it. So that's a long way to go for me to break even. So, and see how the 200 moving average line is up here. So that's why I'm thinking I'll hold it until at least it touches that, and then make a decision then. But it still has a long way to go. Okay, so Gopro is one of the ones that I just recently bought on the crash here. I think about it somewhere March 24th, somewhere around here, and it's an uptrend. When I looked at GoPro's fundamentals, they didn't look great, especially with the price being below $5, considered a penny stock. And so I was wondering if I should use GoPro as like a day trade, like a penny stock, or if I should just go with what I know. I love GoPro. I mean, I have really 2 GoPros here. The GoPro Max, the 360, and then the 5, and I use them all the time. So I don't know why GoPro's price is so low. I mean, they have a lot of competition, but every time I watch people using action cameras on TV, like their carpool karaoke, the comedians in cars getting coffee, they all use GoPros. I don't understand why the price is so low. But so I bought 400 shares of those, and hopefully they can keep growing, because I love GoPro. So that's really the only reason I bought them. Everything tells me that they're not a good company, but I like them, so that's all I need. And it's moving up. So far, it hasn't really disappointed. If I show you guys the price, like let's say last 5 years, and it doesn't look good, right? Look at that. It was at $65.50, and it's just this massive collapse, and I don't know why. I don't understand, and it just keeps going down. So all the technicals, fundamentals, they don't look good for GoPro. So this one is just a gut feeling. It's just a company that makes products that I like. That's the only reason about this. Okay, so let's go to the next one. It's a moving quality PFP income fund, another dividend stock. As you can see, I don't even know how this happened either, though, because this is when I feel like a newbie. Unless it dropped a lot. Yeah, so I guess I bought way back here, and that was $10, and it dropped all the way down to $7, and I didn't sell it. This one I think is because of dividends. That's probably my justification. Aside from holding it for 1 year, I think this is probably the other reason is it's a dividend stock. So, but look, it dropped way down here, started recovering, and dropped all the way to $4.55. Not right now, it's 8. So okay. So this one I just keep holding on to it, and hopefully they keep moving up. But it's starting to consolidate here. Doesn't really have a lot of action, so I don't know if it can get up to that green line. Coca-Cola, bought it recently. It was doing good. I bought it down here, and so this is the one that it feels like it's changing. So the way you look at it, like how zoomed in you are really affects how the pattern looks. So like I keep moving this one, but really realistically it should be more like this. You see that? So that's the uptrend, right? And then boom, it changes. And this looks like it's going down. You know what I mean? It started to settle down, like it came down here. See? This is lower lows. If I make another line, it goes right through here. It looked like it changed momentum, but this is my exit. So this is the highest point that it gotten since I bought it, and this is the 10% mark. So it touched it a little bit, but it's starting to recover. So we'll see what happens. I'll let it kind of observe it for a little bit. Hopefully it keeps going up. I think it has to do with the Berkshire Hathaway. Recently, Warren Buffett kind of talked about how they lost billions of dollars. I think was it? I'm not sure, but I think 45 billion or something like that. I'm not 100%. So I think that's why they own 10% of Coca-Cola. So that's probably why it has that dip. Because I mean, I'm still buying Coke products. You know what I mean? I still go to the store and buy, Coke here and there. So I don't know if coronavirus really affected that a lot, but it does look like it's on a downtrend. So I'll just keep watching it, and then hopefully it'll climb instead of drop. This is probably one of the if it keeps going like this, it's probably going to be one of the first ones that I sell. Okay, so that's Coke, and then this is another one that I just recently bought. So I bought it right here on the 24th, and it was recovering pretty good, and then it had a couple of what's that, 1, 2, 3 higher highs, but then it just looked like it started kind of coming down like here. See how it broke this pattern again, and it actually went below my yellow line here, my yellow line, my exit line. So I got all 3 lines right here. This is the bottom. This is my break-even point. This is the exit point. So that's 10% from the highest. But it looks like it's recovering, so I'll hold on for it. I'll hold on to it until I see something change. See, this one is obviously supposed to be something like this, and so that tells me the pattern changed right here. I'll hold on to that. This is Lamb Weston Holdings. McDonald's, another company I just recently bought. Bought it down here, right here, and it kind of dipped below that point for a little bit, but now it's above that point. It's doing the same thing. It looks like, I don't know, man. If I'm going by gut feeling, and again, don't take this as advice or anything, but it looks like it's getting ready to crash again. Like the market in general, it's getting ready to crash. Because even though there's a lot of stocks that are recovering pretty well, and some of them are hitting new highs, like Netflix, AMD, and the Chug and stuff. This one looks like it's starting to settle, and I don't know, it might go down. That's just the feeling that I have. Okay, Microsoft. It's another one. I have weird lines here because it had this momentum, this pattern here, uptrend, really like pretty straight actually, and then it broke that and started another pattern. So I wasn't sure where to start this one because it looks almost like I'm gonna delete it. See, it doesn't look like an up and down. It looks like a little hook, like a little Nike sign. Yeah, but it's still higher lows, higher highs, higher lows. So I'm gonna hold on to that one. This will line up a little higher. I have this alarm way down here, but it doesn't seem like. Hopefully, it doesn't go all the way down again. So Put it right there for now. That's the alarm. So if you hit below that point, you can let me know. Netflix. I had 5 shares of Netflix that I bought at 100. I bought it at $189, and I sold 2 of them, about $800, so I can get rid of my margin account. So right now I have 3 shares, and yeah, I mean, it's going higher. I think it's gonna cross this yellow line. I'm not sure, but it feels like it. Okay, and then there's Noah. This is the one that crashed on me. So as you can see, it's way below my break-even point, and it's a North American. Sorry, so it's not an oil company. It's a construction company that deals with the oil industry. So they do construction for what are the people that they're refineries. So they do construction for refineries, and I guess they don't have a lot of business right now, and so it crashed. See, this one I bought way back here, and again, huge jumps, very, very volatile, and then it just dropped. So in December, when I bought all the shares, I was actually high up on this one. So I bought it way back here, 2018, 19. It had to be 2018 because 2019, because I didn't sell it in 2019 December. It was going up, and right around when I bought it, when I sold the other stocks, when it just crashed. It's not really recovering. It's not recovering very well. So I don't know. This one's gonna hurt if I have to sell because I'm down 50%. See how 1, 2, 3. It touched this point 3 times already. Went down. This is the bottom, the lowest low. Hit that resistance. See what I'm thinking. This is just me analyzing it. So the bottom, this bottom right here is higher than the last one. And it dropped again, but it was still higher. So it looks like this is an uptrend, even though, you know, I had these other points here where it hit, was resisting a couple of times. 1, 2, 3, 4. So right here, this is what we're looking at today, but it's going down. So as long as it doesn't go below this line, then it's an uptrend, right? That's what I'm thinking. So I don't know. I hope that one recovers because that one hurt. There's another one that gave me good returns. MBCR, which is Novocure. I think it's a biotech. What was that? Like a biotech company. I'm not sure, pharmaceutical probably. So it did spook me here. So again, it crashed February 20th. It started recovering March 18th, right? But then right here, it just took a big drop. See how it had nice momentum going up? And then this spooked me, so I sold a bunch of shares. I can't remember where exactly, but I think it was after this thing crashed. So I thought it was just going to keep going. And it started recovering here at the bottom of this yellow line. So yeah, we'll see. I'm up on this one though, so I'm not too worried. Next one is Thinkor funds. I have a lot of stock, guys. Thinkor funds, another one. I think this is one of those dividend stocks. Okay, same kind of pattern where it recovers pretty evenly and then it starts consolidating. See the difference between this up and this one? This one's a little bit more steady. And so I'm guessing it has to do with volume here. And yeah, as long as it keeps moving up, I'm gonna hold on to that. Thinkor Income Strategy Fund, another dividend stock right here, same as this last one. Big movements when it initially started recovering and then starting to settle down here. Right. As long as it's in the uptrend, I'm just hold on to that one too. I think they're both Thinkor, yeah, Thinkor. It's PTC Therapeutics. They started doing some weird stuff right here. So let me adjust this one right here. So see, it had this uptrend and then crossed it here with a big gap, but it maintained it. So now it looks like this line should come down. I'll keep it up there just to keep hoping. Oh, even this one is going below this line now. Yeah, I don't know how much more I should let it go down before I sell it. See, this is the top, this is the bottom, and now, so this is the bottom right here. So now this is the lower low. So it's starting to show a downtrend. I should have sold it here. Okay, we'll see. Probably gonna be another one that sells soon. This one looks good, nice uptrend. It's starting to consolidate here a little bit more. See how there was a bigger movements, and now it's starting to get smaller and tighter. But it's still looking good, so I'll leave that. Ring, that one's, I think I just bought that one. Yep, I just bought it right here. Went up. Ooh, what happened? It went down. I was worried that I made a bad choice here, but then started recovering, touched a little bit, and now it's on the uptrend. So even today, and hopefully that'll keep going. But yeah, I was a little bit worried when I first bought it down here, and then it touched and went below it. I was like, ooh, should I sell it or what? But I held on, just kind of observed it, and it's recovering. Let me check how long I've been on here. Give me 1 second, guys. Hour and a half, okay. All right, so Sandstone Gold Limited. I've had this one a little while. I think this one made me some money. I recently sold some stocks again to pay off the margin. It's still moving up, so it has a nice little uptrend. Even this one, which is today, is still moving up. Let me check the map. Okay, so it is a higher high. See that? So that's the highest for a while, I think. 5 years. Yeah. Okay. I bought that one a while ago, I think. Like that. So that one looks good. I'm gonna leave that one alone. I mean, I did sell all the gains so that I have 1,000 again. So I recovered my money, and now anything that changes from this price, like I mentioned for AMD and Chug, it's just all extra. Starbucks, I just recently bought. I bought it right here again, March 24th. Right, it dipped down, and I was recovering it. So then I'm gonna leave that alone. Just keep watching it. Sony, I used to be a Sony, what do they call that? Fanboy. Used to be a Sony fanboy. Anything Sony, I wanted to buy it. Anything and everything. Especially before when the portables came out. This is before the iPad. I'm sorry, the iPod. Back in 2004, when I went to Japan, 2005, when I went to Japan, man, I used to walk through the electronic stores, and I'm like a kid in the candy store. I just loved everything. and Sony was killing it back then. But now it seems like Samsung is just destroying everybody else, and Apple obviously. I'm not a big Apple fan, but they do have a lot of good ideas. Okay, so this one's moving. I bought it over here. It's going up. I'm happy with it. So it hasn't disappointed me yet. This one, man, this is a cautionary tale for you guys. So with this, so remember, normally I buy $1,000 worth of a stock, and so normally I buy $1,000 from a stock. This one I bought 1,000, and it started dropping, and I panicked, and I did the one thing you're not supposed to do, right? I mean, I guess really that's how you look at it. If you're doing day trading, you don't want to add to a losing position, from what I understand, because obviously you thought it was going up, you made a mistake, and it started dropping. So you don't want to add to that. Back then when I bought it, I wasn't really looking at it as a long term, but I ended up having to hold it long term, because as it started dropping, I added more, and I added another 1,000, and I didn't get out in time. So now I'm holding for $2,000 of this stock. I'm down 30%, I think. I don't want to sell it right now. I wanted to get close to this green line, and I'll probably end up selling everything. It is a dividend stock, so it is giving me pretty decent dividends. I think that's the reason I bought it in the beginning, but I did panic when it started dropping. So I guess now that I'm saying it out loud, because I was thinking long term, then it's not as bad buying it as it goes down, because I probably, like I mentioned, when I did the way I was doing my technical analysis, I was looking for stocks around basically the 52-week high, and when you do that, most likely you're buying at the peak, so it's only going to go down for that recovery, if that makes sense. So if all the stocks are going like this, then if you buy it at a 52-week high, that means you're buying it as it's going up, and it's gonna what's the word for that? It's going to recover. Recover is not the word. What is the word? Not the bird. Whoa. Correction. It's gonna correct right down to keep that trend, right? Like I've been showing you guys the whole time. And so when you buy it on a high, it's going to correct, and it's okay if it goes down a certain percentage, as long as it keeps that trend. And with this one, it broke that, and then I panicked, and I really wasn't that experienced back then, so I just bought another 1,000, and then I had to hold it for a while. Anyways, I don't know if that made sense, but I have $2,000 worth of that, minus the, I think it was minus $400 or $500 from what I'm because I'm on the red. This is the SSR mining, another one that I just recently bought. I don't know why I bought this one. I think it came up somewhere as a good company, and then I bought it somewhere over here, and so far so good. I mean, I bought it here and dipped down, and now it's recovering. So it's way up here now. All right. That one's going good. Sovereign Bank Corp. This one. This is one of those that I bought, and the way it happens with Robinhood, if you do a market order, which I did for most of these because I didn't know what I was doing. As you can see, I bought it way before. Like I bought it in 2017, and because it was a market order, somehow it got pushed way up here to 940 something, even though it was down here at 7 something. So I don't even know how that happened. That I bought it in a time. In fact, you know what? Before I confuse you guys, let me see if I can find out when I bought it. Give me 1 second. So accounts, and which one did I say it was? SVBI. SVBI. So it is a dividend stock, so I am getting dividends every quarter. I bought this one October 2018. Okay, right here. October. So see how October is right here? That's the top of the top for before it started crashing. So anyways, I think it's my bad. I think I was confusing for another one, but I have one stock that the time that I purchased it, the average price was down here, and because I did a Robinhood market order, it was like up a couple dollars more than the current price, just because there was so little volume that I guess when it went through, it went up on a higher bid, and then it dropped immediately after that. Anyways, I guess that's not it. Let's see. Let's go back to the daily charts. This one is T-Mobile. Again, I just bought that one too. Bought it somewhere here. No. Here. See? This one, even this one's like that. Anyways, I bought this is my break-even point, and then moved it up. Especially recently, it looked like it was starting to consolidate. So that's what I've been talking about this whole time, right? It has big movements, and then it starts to consolidate. It starts getting smaller and smaller movements, and then it can either go up or down. And this one decided to go up, so it just shot up here. And I mean, it's not a huge difference from 90.36 to 95 to $5. That's a big difference. So it just shot up, and so that kind of pulled me away from my break-even point, and which is good. So I was contemplating selling it because it was just sitting around in that general area, but now it looks like it's gonna start pushing up. Okay, Uber's been acting weird recently too. So when it went down all the way to 1371, by the time I bought it, it was 26 something. So it's like a double. If I would have caught it right at the bottom, I guess if woulda, coulda, shoulda. But if I would have bought it right as it was recovering somewhere around $18, $19, it would have been a lot better. But caught it in around 26, and it just kind of went flat. It even dipped down a little bit, and then it went flat. It went up, went back down, and now it looks like it's gonna start pushing up today. It's not looking good, but yesterday it was pushing up a little bit better. Okay, and this is the last one right here, guys, before we move on to the other applications. So this one is, as you can see, Verisell. I've had this one for a little while. It went below my breaking point after the crash, but it now is recovered. So as long as it keeps moving up, I'm gonna hold on to it. If it starts dropping, then I'll sell it, just like the other ones. So no, this one looks good. This one, I'm not worried about that one. Okay, let's see. Sony market's above. Let me check that one before I forget. So Sony, okay, it went up past my yellow line. So now I'm gonna move up my yellow line, and I'll put a so as you can see, this is my new resistance right here. It looks like this is the bottom, so if it goes past this point, it's just a quick alarm, so it lets me know if my stocks are going up or down. Because I have an alarm for a below price and above price, then it tells me when the market opens, a bunch of alarms go off. It tells me if the market is going to be generally up or down, right? So if I have 3 or 4 alarms go off in the morning saying that a certain stock is above a certain price, then most likely the market overall is going to be up. And so when I start day trading, that's going to help me out. that's not gonna be for later. SSRM, let me check that one first. Okay, so I'm gonna make, if it goes past this line right here, I'll have it give me a notification. Uber, I just looked at Uber. So Uber, if it goes, let's say this line right here, I just like having those alarms since they're so easy to make. It gives me peace of mind that I'm not gonna miss something. Okay, so let me show you guys. Let's see, hold on. Hold on one second. Let me switch the scenes here. Okay, so I'm gonna switch the scenes to this right here, and hopefully you guys can see what I'm doing. Hold on one second. Okay, so this is investing.com, and so because Robinhood, so this is Robinhood here, and then Robinhood only recently added this feature right here where you can see which stocks you have. Before that, they didn't, like a little while ago, they didn't have this, so there was no way for me to see in the one list how many shares I've had, or what price I bought them, or what the equity was on all of the stocks that I had in Robinhood. I just had basically something that looked like this, where you can tell what the portfolio has done in the day of, intraday, a week, a month, and so on, and then it would just have the list right here. And I can change this to like total return, or total return, or your equity, but you didn't know how many shares. There wasn't really a lot of information, but now they changed it, so because they didn't have that before, I was using investing.com to basically do the same thing. And the best thing about this one, you can actually look at past performances. So these are all my stocks. See, this one shows 2, but I have 17. So it is acting weird sometimes too. Okay, 17 right there. Okay, and so with this one, you can go to like performance, so it tells you how it's done, all of them, how all of them has done. So like, let's say about most of these, let's say a month ago, so I can see that this one in Novo, this is the construction one. This is the construction one, right? Yeah. So anyways, this one has been doing the worst for the month, and Chegg is gonna be the best. You see a bunch of them are actually doing pretty good. But anyway, this one gives me a lot more information, gives me some fundamentals as far as revenue, volume, earnings per share, P ratio, all this stuff, all at a quick glance, just like that for me. Right. So the only thing that it doesn't tell me if it's the fundamental, or even on the fundamental, like it doesn't give you an average. So like for example, let's say AMD, right? AMD is a competitor with Nvidia, Intel, right? And so their PE ratio is 127.7, but it doesn't tell me how it compares with Intel or with Nvidia. So for that, I had to do something else. I had to make my own stock tracker, and actually I haven't really updated it since the 28th, so actually it's today, so a week ago. But since I made this, I actually sold some of these. This isn't up to date. But what I did is I did the shares, how many shares I had, the cost, last price, 52-week range. So I'm collecting all the information that I need to do some fundamental analysis on these. Okay, so 1-year return, 3-year return, which sector they belong to, which industry, the market cap, average volume, so you can see which companies are bigger and they basically trade more. The PE ratio, and then this is the part that helps me make the decision. So I got the PE ratio, and then this low, average, and high. So for that, I don't want to make this too complicated, but I'll go to the Ali quote snapshot. So this took me pretty much all day. So let's check AMD. Right. So you go to AMD, you go to fundamentals, right? And this is what I like about this website. Okay. So it gives you your PE, which is 116 here. You can tell it's not updated. 116. Mine is not updated. This is the most updated one. 116 and an industry range, right? So 116 is low. So that means it's undervalued compared to the other companies in that same industry and I guess sector. It says industry, so I guess the electronics, semiconductor industry, right? So compared to like Intel and Nvidia, they're undervalued, right? Now that's 116, right? So it's not $116. It's just a number. It's 116. The problem with that number is that you put another company like Amats, which is the Applied Materials. So you look at their fundamentals and it says 15.53 and it's low, right? So for the industry, 15.53 is low for Applied Materials, but 116 for AMD is low, which if you're just looking at investing.com, you look at fundamentals, right? And then the PE ratio. AMD right here says 127. I don't know. It's everybody has different numbers, but it's close enough. So it has 127, right? And then AMAT is right here. You would assume that if you believe Applied Materials is a bargain or a valued company because their PE is low, then you would assume that they're high, the AMD is high. But when you're looking at Intel and when you're looking at Nvidia, especially Nvidia, since really they've been growing a lot. I bought some Nvidia stocks when I first started, but you wouldn't know. You wouldn't know if 127 is a value or not. Okay, let me add some more music. Hold on. Let's see. What do we want to hear now? Silent Partner. He's got a lot of songs. They're not all great, but we can skip it. Oh, what happened? Hold on. Okay. Sounds like Sex and the City music. Okay. So does that make sense? So just looking at these numbers here doesn't really tell you much unless you know the industry, and you're not gonna know all the companies in the industry, right? So the way you kind of try to fix that, alleviate that, is to go to the Ali. I don't know how to say it, Ali research page here, and then that compares it with the industry, right? So if you look at PE ratio, okay, that's low. That means if you're only looking at the PE ratio, then AMD is low compared to like Intel and Nvidia, right? But now if you're looking at, for example, the return on equity, so 30.07%, that's high. That means their what they share. I'm gonna mess this up. What the shareholders' equity, the return they get on the shareholders' equity is higher compared to others in the industry. That makes sense. Okay. So I mean, there's a lot of numbers here, and to be honest, I'm familiar with all of them, but I'm not 100% on all of them. But let's do another example. also float. Float is, I think it's like basically shares that are out for purchase for public, and it's 99.69, which is high. I mean, that's a lot. That means pretty much all the shares available are out and available for the public to buy. Let me know if I'm wrong. I think that's what that means. Okay, let's get an easy one. Let's see. Let's get an easy one. Return on. Let's look at inventory turnaround. So, see, that's another one. It doesn't really give you a percentage. It just gives you a random number, and you don't know what that number is unless you compare it with other companies in the same industry. And so that's telling you that's low. So inventory turnover, low means, see, I don't know if that's good or bad. Okay, so anyways, this one gives you a bunch of numbers. Again, I would prefer to use fundamental investing strategies, but they're a lot more complicated. They're a lot more, it's like art. It's all really subjective. It really goes about, it really, how you look at the world and whether you're positive or negative really affects your decision on these companies when you use fundamentals. You know what I mean? Some stuff is clear, like if they have a lot of cash, if they have a little debt, and then it makes it a lot easier. But some stuff you just don't know. You know what I mean? Some stuff you just have to make a guess. Okay. So that's it. And like I said, it gives you the technical here. So it gives you daily, weekly, monthly. So you can go, okay, if I'm going short, okay, so I want to, if I'm buying and selling today, okay, then buy these, because you'll be able to get in low and be able to sell high. I'm assuming that's what that means. Okay, so that's it. And then what was I going to show you guys? Oh yeah, so I was going to show you guys my sale history. I don't want my account number to show up, so hold on, let me switch the screen real quick, just because I'm not sure if you can see the account number. Let me see. Check. Let me get to the page first. And history. Oh, it's not going to show up. Oh, what happened? Hold on. I didn't know you guys were texting. Oh, that sucks. Is this just like an analysis tool as opposed to a marketplace to buy and sell? Let's see. I'm keeping it long term. Dollar cost averaging is good for long term. Hey, Mr. Gary 08. My bad, man. I thought I was going to be able to see you guys' chat comments up here, but I guess not. Hold on, let me fix this before I keep going. So, embed stream, copy. See, the problem is that the way I had it, I have it clear here on the screen. So when I put it on my phone, it wasn't, I couldn't see it because the background was white, the letters were white. So I thought I fixed it, but sorry about that, man. Don't sell SPHD. I'm keeping it long. Oh, okay. Hold on 1 second. Let's see if this thing's gonna work. Yeah, this is gonna be tricky. Okay, I see it. Don't sell SPHD. I'm keeping it long term. Dollar cost averaging is good for long term. Yeah. So I kind of caught myself when I was explaining it. So if you know that a company is good, so like for example, I think uh, I think when Warren Buffett first bought Coca-Cola, um, I don't think he bought 10% right off the bat. I think he bought as the price kind of dropped. And anyways, that's what he recommends. I'm not 100% sure on how he did it, but yeah, for SPHD, which is that dividend stock that I bought $2,000 worth instead of just 1,000. I was thinking long term. Um, I'm trying to remember right now because I don't want to contradict myself, but as I kind of explained it earlier, if you're going short, so like if you think the price is going down, I'm sorry, if you think the price is going up, so you buy and the price goes down and you buy again, so you're just buying on a mistake that you made and it doesn't make sense, right? I did that a couple of times when I day traded in 2016, and once since I restarted this last month. And so, um, yeah, that's not what you want to do. If you're, for example, Netflix, right? So I think most people can tell that Netflix is most likely going to keep growing, especially once they start production again. Um, so if you buy Netflix because in the long run you think it's going to be up, and then it goes down, but you still think it's going to go up, then because you know you're going to hold it for more than a year, then it makes sense to buy it when the price is low because you're confident it's going to go up, like Amazon or like Apple and stuff like that. Okay, but so far SPHD, I bought it and it was up for a little bit, but for the most part I've been on the red. The good thing is that it really hasn't dropped that much, and this entire time I've been getting dividends from it. So I think I got more dividends. I got enough dividends to make up what I've lost, if that makes any sense. Okay? And is this just like so Mr. Gary '08? I think you're talking about the the Thinkorswim, right? So the Thinkorswim, it's an actual trading platform, and I just recently today put $1,000 in there so I can start trading a very small amounts on Monday. And because I have less than $25,000, then the whole day trader rule kind of applies. If I do more than 3 trades in a week, it'll get locked out, and I won't be able to use it for up to 3 months or something like that. And so I'm keeping it as a cash account. And if I do day trades, I'm not gonna do another day trade the next day. It's a cash account, so that I don't know. So I still gotta figure it out. I know Robinhood I have more than 25,000, so I can do day trades on that. The problem is the fulfillment time. It's kind of slow. It's not great, and so a lot of people complain about doing day trading on Robinhood, and I just don't want to start out kind of on a what do you call, on a disadvantage, yeah. So I want to, because I'm still learning, then I want to make sure that I start out the best I can. Okay? And then the Thinkorswim by TD Ameritrade seems to be the best platform to do that. Plus, I don't really want to sell all my stocks on Robinhood right now. I want to sell it on the right. I want to make sure I time it right. And but I think slowly going to transition from Robinhood over to TD Ameritrade, just because I feel like I'm getting a little bit more advanced. I'm gaining more knowledge on it, and so it only makes sense to kind of move up. Plus, you can short on TD Ameritrade, and I don't think I can do that with a cash account. But if I do decide to move most of my money to TD Ameritrade and get a margin account, then I'll probably start shorting, because that's really where the money is, right? When you're able to short as the stock goes down and go long as the stock goes up, and do that throughout the day. But by what I've seen on YouTube and read on other books, That's really where you make the money on the first couple of hours of the stock market opening. That's when it's the most motion. And also doing swing trades by buying the last hour of the stock market stock market being open. So really, that's where you make more of your money by short selling, going long in the morning, get your profits early in the morning, and then if you decide to go swing, do some swing trades, and doing that at night, not night, the last hour of the trading hour of the market. I don't know if that made sense. Okay. Well, that kind of sucks that I wasn't able to see your comments there. What is going on with this chat, man? I had problems with the chat yesterday too. Sucks. See, I can't even see it on the phone. Okay. That's gonna get me flustered. Not being able to get this chat to work. Okay. So anyways, I was looking at the Robinhood history. Oops. And it didn't let me see it for whatever reason. I don't know why. Account history. No. Actually, maybe I can do it on my phone. Hold on. Let's see if I can do that. Because this thing is gonna crash. Hold on 1 second, guys. Okay, I'm bringing the phone scene up. All right, so this is, you guys are looking at my Robinhood account here on my phone. Right. I think you guys see the history. Okay. Okay, right here you can see these are the last 30 days. Oops. So today's the 8th, right? Yeah. So yesterday I sold $193 worth of NDCR. I sold $373 of PTCT, $537 of sand. And all of these, I bought enough. I sold enough so that I can bring it down to like $1,000. Okay. Okay, Alex, give me 2 seconds. Let me welcome to the chat. Let me go through this and then I'll see what that video is about. Okay, so let's see. Sand 537, and then CYRX 521. Netflix I sold 800. So I sold all of these right here yesterday so that I can cover my margin account, so that now when you look at my investing, I wish I can show you guys the browser. It crashed on me. Okay, so you can see that it's all the stocks right here. It shows. Oops, I'm confusing myself. So all the stocks right here. So yesterday I had, I think, $8,000 still of the margin account. So I got rid of that. So now, if the market starts crashing, then I don't have to worry about selling stocks or adding cash to it, because now it's all mine. Yeah, does that make sense? Okay, Alex, let's check out this video. I hope it's PG, right? Pause the music first. It doesn't have to be PG, but I just don't want to put. Okay, good. My daughters watch my YouTube channel. That's why. Okay.
Hey everybody, Kyle Dennis here with you, and I've made $7 million.
Cutest pangolin.
Now, I know people here
Are pangolins cute?
have a ton of time.
Oh, he's gonna go in. Oh, I just know he's gonna go in. Oh, I knew he was gonna go in. Man, I hope he walks himself back to the house.
I don't know if it's cute. Oh, I got stuck. It's crazy looking though. Oh, I got stuck.
I think for a pangolin, life.
Is it playing or did it get stuck? I don't know, man. You think they're cute? They look like Shredder from Teenage Mutant Ninja Turtles. It's crazy. Man, some of the animals in this world are insane. That's cool. Thanks for that video. I heard the knocking. What was that? You thought I was gonna? Well, it's 5:30 in the morning here, so I didn't think it was gonna be somebody knocking on my door. The knocking. Oh, because it's gonna make you think like somebody's knocking on your door.
Cutest puddling rolls.
Hold on. Let's see.
In mud. I've seen this before. That's what it does, isn't it? Rolls in mud, right? Oh, fucking little prick! That scared the shit out of me. Cutest puddling rolls in mud. I've seen this before. That's what it does, isn't it? Rolls in mud, right? Oh, fucking little prick! That scared the shit out of me.
The knocking. That's funnier than the original video. Well, I guess it being 5:30 in the morning here, and it's I didn't expect somebody to be at the door. That is funny though. No, I'm in Hawaii, like way west coast. I'm in the middle of the Pacific. Yeah, I mean, it sounds good when I tell people, "Oh, I'm in Hawaii." People are like, "Oh, that's cool," but yeah, it's small. I love it, but it's a small place, man. Like we don't have any like fires, not fires, Fry's electronic stores. Here, I mean, it didn't get too crazy for us here. Um, it didn't get really crazy. We have, I think, 600 cases, which is, I mean, it's a lot when you consider the population, but Oahu has the most people. It has maybe about 1 million, but with no tourists, the population kind of dropped down, and it seemed like they had outbreaks on the other islands, which have less people. So I guess as soon as they stopped the flights or started forcing people to quarantine or tourists to quarantine, then it started slowing down. So today actually, so it's 5:30 in the morning, Friday, May 8th, and today is going to be the first day that some of the businesses, like what was it? Some like I think Best Buy probably. Some of the stores, retailers start opening up. So yeah, so it didn't get too crazy. I mean, it's weird though. I mean, because I live in Waikiki. I'm a wedding photographer, so Waikiki has a lot of tourists all the time. Even like, I mean, you have slow season and high seasons, but even on the slow seasons, there's just people walking around everywhere. There's a bar right next to, right on the first floor of our apartment, and so there's a lot of fights. I don't know how many videos I've taken. I stopped putting them on my channel because there was times where my daughters were watching my vlogs, and then all of a sudden a fight breaks out, and I have to explain what was happening. So I kind of got tired of explaining, so I stopped putting them on my vlogs. But yeah, people just randomly fight because there's so many people. But that bar closed down back in March, right? And so it's been quiet. Like normally, there's noise to 2, 3, 4 in the morning. Cops are always outside. People always screaming, cursing each other out. But since they closed that bar, it's just quiet. It's great. It's weird. It's kind of spooky because we got so used to the noise that now it's like, I mean, it's just weird. I don't know if that makes sense, but and before we lived in Waikiki, we lived in Kaneohe, which is the kind of like the northeast of the island, which is quiet. There's not a lot of people. It's more like a really small community, and so it's really quiet. We were on a loud street, but in general, it's really quiet, and so it was a big difference. So now it seems like it's quieter here in Waikiki, which is like the mecca for Oahu, and so it's kind of weird. You know what I mean? So that's probably like the biggest uh, difference that we noticed. I don't know anybody that got sick so far besides people on TV and stuff that we see. So yeah, it's not too bad. We still stayed home. We try to avoid going out. But I got two girls, and not having school for them has been has been rough. You don't want to watch 'em- you don't want to let them watch TV all day. You can't make them do homework all day either. So like you got to balance it out, and then you can't tell them to not watch TV, and then you're sitting around watching YouTube, Netflix. You know what I mean? So I mean, I guess it really is how you look at it. If you're able to work, you can consider yourself lucky because I'm a photographer for tourists here for weddings. So if it wasn't because of this whole investing stuff that I kind of explained in the beginning, I would have been in trouble. But thankfully, I was able to save. We were able to get some like the whole. Are you in the U.S.? Yeah, yeah. So because of the East Coast, yeah. So you got your check from the, what do you call that? The the packet, whatever. Yeah. No, you didn't get it. Oh, that sucks. Oh, okay. Yeah. Your parents got it though. 18. Yeah, 18 and older. But then your parents got the $500. Yeah. So yeah, it's you guys got hit hard over there, right? Like which where in the East Coast? Yeah, $500 per kid. We got $1,000 because I have two girls, and then me and my wife both work, so it was 3,400 at the end. Yeah, yeah. So that helped a little bit, and then we have our own business, photography business, and so we got some from that small business loan thing. But this investing stuff, man. I mean, if you're 16, just think about this, right? So a bunch of people, you can do the math. Is you can go onto any website and do this math. If you're 16, and let's say you retire at I don't know, like, let's make it early. Let's say you retire at 50, right? So that gives you 34 years. Yeah, 34 years. If you spend $5 in coffee or $5 in an energy drink or whatever every day, and you invest that for the next 30 something years, man, is the way that compounding interest adds up, man, you'd be rich, you'd be set. You can definitely retire early. It really only takes 10 years, especially if you're working now, right? So especially if you take it seriously and invest and save, you can be retired in before you hit 30. You know what I mean? There's a lot of people out there that have plans on how to retire. That's what I was trying to do. Obviously, I was trying to retire early and start traveling with the family. You know, do like some trips and stuff, because the wedding season is seasonal, or the wedding industry is seasonal, especially here in Hawaii. So June and October are the busiest months. Like, we shoot 2 3 weddings a day, but then there's times like August and December where there's almost no weddings. And so originally we would go travel um, August and December, and then we realized we can actually extend it. Instead of going 2 weeks in August, 2 weeks in December to Japan and Mexico. I'm from Mexico. My wife is from Japan. Instead of going there, we can actually start doing 3 weeks, 4 weeks, and slowly kind of make it longer and longer. But obviously, this coronavirus kind of put a halt to all that. So yeah, so it's not. I mean, you gotta start early, man. Start early. I'm more than twice your age. I'm 39, so man, I'm sure you hear from everybody. But if I was 16 right now and I knew what I knew now back then, I'd be retired by 30. You know what I mean? But now I gotta start new. I gotta start fresh. Try to do all this investing stuff. Um, Try to make some money from it. All right. I don't know what a lurk is. I'm still new at Twitch too. But thanks, appreciate it, Alex. I'm gonna do some gaming today later on after I wake up. You know, go to sleep, wake up. But yeah, go do your homework, man. Oh, okay. Okay. Nice, nice. Yeah, I'm still new at this, man. I'm still trying to figure out. I was on YouTube this whole time. Oh, okay. Thanks. Appreciate it. So that's what lurk is. All right. Appreciate it, man. Thank you. Thank you. Thank you. Gotta figure out how to put this chat outside of. I need a second monitor. All right. Let's see. I got another alert. Let me move back to this trading scene here. Got another alert. We got. Ooh, okay. So this one's moving up. This is the one that I just sold too. So now, look at that. See how it shot up? See, when I checked, it wasn't all the way up there. It was 2108. Now it's past 2174. So now I got to put a new alarm. Let's see. What looks. It's just barely going to go past this resistance point over here. You know what? I'll put another one right up there just so that I don't miss it if it keeps moving up. All right, so right now it says I have one viewer in Facebook. one in YouTube, and one in Twitch. If you guys have any questions about my portfolio, let me know. My strategy going forward, like I mentioned earlier, it's just going to be basically tracking even the longs, even the stock that I decided to buy and hold long. I'm going to track it more often so that I don't miss when it has big dips and not end up being in the negative. Actually, you know what? Let me show you what my current positions look like. Okay, like where I've been kind of losing the most value. Okay, so it's easy. I just put net profit loss. So you can see this one right here. That's a construction company, the North American Construction. That one is down 50%, almost 51%. That's $512. So if I sell that now, I mean, there's good and bad, right? So maybe right now it's not the best time, but in December I sold a lot of the stocks. I sold a lot of stocks because it's taxes, right? So I had one. Oh, actually, I can show you here too. So this is my closed positions. So as you can see, my previous strategy, I would end up selling all the losers after the year, right? But that meant that, let's see, so this is 2019, right here. So, but that meant that I would end up losing, hold on, music. I would end up losing a lot of money. So like on this one right here, Savgen, I don't know how to pronounce it. So that one I lost $910 out of 1,000, right? So 90%, right? So my original thought was, okay, if I hold it for a year and I make money from it, then I only have to pay 15% on the gains, right? For taxes. But if I lose money on it and I sell it because it's a loser, then at least I can. If I'm only selling the losers, then that means every year I have negative gains, and those negatives are going to help me out on taxes because again I'm self-employed, so anything that I can find to help me with the taxes, it's will be beneficial for me, right? So it's what people do. You know, if you spend money on clothes or cameras or equipment that helps me generate money, especially on the photography side, because that's what my business is focused on, then that money is tax deductible. So same thing with these investments. You know, if I lost $910, that's a loss, right? So I can use that as a deduction. Is that how you say it? Something like that, right? So that's what my thought process is. But then I realized that if I wait till it gets negative 90%, right? If I sold it at, let's say it drops, so if it gets to negative 90%, that means I lose 90%, $900 in one stock, right? So if I'm wrong once and it hits 90%, I lost $900, right? But if I track them better and not necessarily wait for that year, hopefully I can keep them for a year and then I won't have to pay 35% on the taxes. But let's say I'm tracking them more often and then it gets to negative 10% and sell it, then I only lost $100 on that one, and I can put the remaining $900 in another stock. So I can basically be wrong 9 times for me to lose $900. Does that make sense? So if I spend $1,000 on a stock and I hold it for a year, lose 90% of it, that's $900 in one stock. If I only allow my investments to go down no more than 10%, then I have to be wrong 9 times to lose the same amount of money. See what I'm saying? I kind of repeated myself, but that's what my strategy is now. It's not let it get down to. In fact, you know what? It took a little while for me to realize that it was the wrong strategy what I was doing, until I realized that, for example, I had one. I think it was this one. I think it was this one, AGFS. Was it that one? Yeah, because I sold it. I'm just gonna make sure. Hold on. I want to show you guys the graph for this one. I want to make sure it's the right one. I'm not 100% sure. So anyways, so there was a stock that I bought, and it went up to, I think it went up to like 300 and something percent, and then after a year I had to sell it because I was red on it. I was negative. It was only like negative 20%, but that means I bought it. It went all the way up to 300 some percent. Right? And then it went all the way down, and I just let it. I just allowed it to lose that much value because I wasn't tracking it, because I just decided to buy it, hold it for a year, and then make a decision after that. But then that's where it's the wrong strategy, right? So it has to be a balance of both. You hold it as long as it's improving. If it doesn't drop too much, you just hold it, right? But once it loses a certain amount, before I read a bunch of books and they were saying 7%. The problem with 7% is that you can have a correction of more than 7%. So like, let's say this is the average, right? And then you buy up here, right? And then you drop below the average. It's going to rebound, but that average right there, that distance from here, from the top where you bought to where it goes and corrects itself, it could be 10, 15, 20%. And so initially, after I read those books, I would set a stop loss of 7%, but I had a bunch of them just get stopped out. And so I realized maybe 7% is too narrow. And so, but instead of adding to it, instead of going to like maybe 10 or 15%, I just decided, you know what, instead of worrying about it, I'm just gonna buy it and hold it. Sorry. But now I realize that even that is not the best strategy. So now I'm, it sucks because, as I was telling Alex here, everybody thinks living in Hawaii is great, which it is, weather-wise, people-wise, food's pretty good, especially if you like Asian food. There's food from everywhere. The problem is that if you're trying to play the market, man, it's not that easy. You know what I mean? There's definitely challenges to trying to play the market when you live in Hawaii, because the schedule is just so weird. You know what I mean? 3:30 in the morning to 10 at night, and then there's no daylight savings times here. I think, I'm not sure. Let me check real quick, but. Daylight savings. Let's see. So March 8th to November 1st. So what happens after Los Angeles time? Sorry, I got the microphone right in front of it. Okay, so right now it's 5:48 here, and it's 8:48 in LA, so it's a 3-hour difference. So there's going to be a 2-hour difference eventually. Okay, so that's when the market is going to open up at 4:30 in the morning here, and it closes at 11. Yeah, so that's a little bit better. But yeah, 3:30 to 3:30 in the morning to 10 in the morning. I explained it in the beginning of the stream, but it's kind of rough because you gotta choose one. You either wake up, you need to at least wake up 30 minutes before, so you can prep, right? You can't just wake up at 3:30 and expect to like figure out which stocks you're gonna put money in and all that, right? You gotta prep so you can set up your graphs. So you gotta wake up at 3 o'clock, right? So 3 o'clock, that means you gotta go to sleep if you want to get the 8 hours. At 7 o'clock. And I know like one guy that goes to sleep at 7:30, but he wakes up early in the, like 2, 3 in the morning to edit, and then goes back to sleep. You know what I mean? I don't know why he does that, but that's what he does. And so for me, I'll have to make a decision to either go to sleep at 7 so I can wake up at 3, or stay up all the way to maybe like, I don't know, 7, 8, right? Even 10 until the market closes, and then go to sleep for, let's say, 8 hours. That puts me at 6 o'clock. And then what can I do from 6 o'clock to 9 o'clock or 8:30 when my girls go to sleep? Eat dinner, watch 30 minutes of TV with them, and then they gotta go to sleep. And so I'll really only end up seeing them for a couple hours. And right now we're quarantined, so when school starts, and actually I can't even do that because unless I decide not to stop working in photography, I have to be able to be up, because that's when the weddings are. Most of the time when I get weddings, it's in the morning, or like right after lunch, or at lunch up to about 3 o'clock, because I gotta go pick up the girls from school. But so able to go to sleep at 7, wake up at 3, prep, and then try to trade. And even then, I've heard that to get really good, you have to practice and do a lot of research, so that you have research, looking for stocks, analyzing the graphs, setting your entries and exits, coming up with your risk reward strategy. You know what I mean? Apparently, you don't want to lose. You want to be a minimum 1 to 2 risk reward. So if you lose so let's say 1 to 2, right? So you're willing to lose 50 cents to potentially make $1. You know what I mean? So, but again, today I really haven't been looking at the stock so much, but that's what I plan to do on Monday. I'm starting out with $1,000 in this Thinkor Swim account. I'm gonna go over there. I'm still disappointed that I can't see the text. I'm sorry, the chat while I'm looking through the Thinkor Swim. Okay. Wait. Yeah, because I can't see it as long as... Oh, I know what to do. Okay. Hold on 1 second. I think I got it. So as long as it's the same ratio, I can... Hold on. Is that too small? How's that? Is that better? Okay. Maybe that's a little bit better. Wait, well, still. I need a second, man. Look at something. Gotta figure this out while I'm on stream. That's not gonna work. Okay, bear with me, guys. I'm still, like I said, all the research in the world still gets you technical errors. If that makes sense. Let me show you guys the trades that I made before that I lost on. And so to kind of show you guys how I plan to track. I plan to track my my trades. Okay, it's not gonna work. Trading Journal 2020. Open. It might not work. Okay. Okay, can you guys see that? Right, so like you see, I have a couple of trades here. I did April 29th, 30th, May 1st, May 4th, and I only, not gonna show up. It's not gonna show up, it's gonna show me errors. Wait, hold on. I gotta fix this. Hold on 1 second. Of course, it's always gonna happen like this, right? Murphy's Law. I am trying to bring up this file. Almost there, guys. Hold on. Okay, and then we're gonna do. Oops, sorry. Studio mode. Okay, and cut. Okay. Right. Can you guys see that? So you can see I did 6 trades. I lost in 5. Only won in one of them, 16.7%. I'm kind of nervous about day trading, especially with this kind of record. But let me show you guys what I did, mistakes and all that. So April 29th, 30th, May 1st, and May 4th. And let's see, Wednesdays, Thursdays, Fridays, and a Monday. The only one that really followed the plan was the winner, obviously. I didn't go into it wanting to lose. And these are the stocks. This is the Bed Bath and Beyond right here, BBBY. These other ones are just penny stocks. I don't really remember what they are. So for these two, I wanted to swing trade, and so I did some research and found out that the last hour of the trading market, or the last hour of the market, is when you want to do swing trades. And to hopefully, and I forget all the details. I gotta kind of refresh my memory, but so that you're hoping for the next day, for a gap up on the next day, and a certain criteria that kind of give you a clue if that's gonna happen or not. But yeah, so that's what I was hoping for those two. One of them worked out. One of them did when I woke up in the morning, which is rough. Actually, you know what? I'll explain right here. But I stayed up, and one of them was high, so I sold right away as soon as it opened up. I made 21 cents. Remember, I only bought about 3 shares at $3.85. So I'm only doing about $10 just to kind of practice, right? So I made 21 cents on each share, up 1.82%. I was aiming for 2, but I didn't want to lose that either, so I kept that. And so it's save is above. No, save. Okay, so let me cover the first one. Okay, the first one didn't work out. I woke up and it was low, and it said fell asleep following day waiting for it to rise. When I woke up, I was stopped out and it had risen after higher than purchase price. So what happened is, the market opened up and it was a little bit low. So I decided to put a stop loss and just wait it out, try to kind of see if I can find an exit throughout the day. And I fell asleep. And when I woke up, it had so after it hit a certain resistance, that's when I put the stop loss, and I just kind of watched it. I fell asleep. I woke up and I noticed that an hour after I fell asleep, it hit, or an hour after I set the stop loss, it hit the same spot again and then shot up. And so if I didn't fall asleep, I would have made some money on that one. Because anyways. So that's that one, and then the other ones, Bed Bath and Beyond, or what is DVAX. So the whole, so this is the setup, right? Buy late, looking for to break. Right here, same thing. And then on these were a breakout. Okay, that's what I was hoping for. But what happened is I lost on all of them. This one. Bought hoping for a breakout. It did, but quickly fell back. Decided to hold above last support. Fell asleep and woke up, stopped out, and never reached higher than purchase price. So that's the same thing. So I was waiting for this one to move up, and so I decided to go in on this one, and then I fell asleep and I got stopped out on both of them. So I lost on both of these on the same falling asleep. Okay, and then the same thing happened with this one. It never, fell asleep and woke up, stopped out. It never reached higher than purchase price. Yeah, so that one just got stopped out or lost on it. And then this one right here got caught and added to losing trade, which is not what you're supposed to do. Same thing. I don't know what this means. Yes, in trading stop. Oh, testing. Okay. This one, I heard of so because I had the issue with falling asleep and getting stopped out, I was wondering if there was a way to buy and automatically set a stop order, but have it move up as the price moves up, right? And so there's a feature here on TD Ameritrade. I'm sorry, on Thinkorswim, that you can do that. So like let's say you go to hit the price, you go sell custom. I say let's stop, and this thing comes up, and you can change it to, I wonder if I can, you can change this to, if it's not one thing, it's another one. Hold on, I'm going to change the chat box to the other side. Okay, so here we go. So here you go, instead of limit right here, you go to trail stop, and then you add the numbers like you want it to be 10 cents or percentage, so you can change it. I think you can go percentage, you can go cents. I don't know what that is. So I was just messing with it, and then I don't know what happened. I think I was watching it, and then it hit, like it set the price and it started coming down, so the stop loss stayed, and it touched it and went back up. So that was just me experimenting. Okay guys, I think I'm gonna end it right here. Alright, let me switch back, hold on. Okay, so I think I'm gonna end it right here. It's 6 o'clock. Once I start trading, I'm probably gonna do the same thing, where I go from about 3 to 6 o'clock. I don't know if I do it every day, because you can hear I'm not really used to talking this much, even though it seems like I do, but I talk a lot. But when I do, I always end up losing my voice or getting kind of whatever this is. So we'll see. I'll try to do it every day, but for now, let's just say Monday, Wednesday, and Fridays, since if I do day trading, I won't be able to trade more than that. We'll have to figure something out. And yeah, thank you for watching. If you're on YouTube and you like this, go ahead and hit that like button. If you haven't already, please subscribe to this channel. If you're on Twitch, go ahead and follow me. I am going to do some gaming videos too, so if you like that, I'm using the Stadia. I don't know, it's not a console, so it's Stadia service, the cloud service that Google started. And so if you like gaming videos, stick around for that. I also have a vlog every Wednesday that comes out on my YouTube channel. This is basically me and the family traveling. Right now we're in Japan. In the vlog, I'm way behind, but in the vlog we're in Japan last couple of days. And after that, it's just gonna be, basically the coronavirus. We do have a trip to California before the coronavirus hit, so look out for that. And yeah, let me know if you have any questions, comments on the comment section below. Appreciate you guys watching, and I'll see you on the next one, Monday.